And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, August 17th, 2021. Well, the balance of the markets threw me a curveball today, not just the NASDAQ, which also I include in throwing a curveball today. We saw some very steep selling, and it actually drove the S&P below where I was labeling, if this was one of five, it could not have broken below 44.32. And it did by quite a bit. And in fact, as it is right now, and the labeling that I've changed, is it just basically extends this minute 3 all the way up to yesterday's highs. I had mentioned previously when it had gotten to 62.75 that possibly we get a little bit of a pullback and it moves up and it gets up towards 66, which at that time was right here, this resistance right here. And it exceeded it. So I had felt that that was the 3 and this was the 4. And so we were on our way to building on minute wave 5. Today's downslide did kind of alter that. So I've extended the third wave up to that high, the internal third wave, and then extended the minute third wave to up to yesterday's high at 76.50. Now, what that does tell us, either this is wave 4, and it truly has to be the completion point for wave 4. If we turn around and slide again and dip below there and start heading for this marker, then it's going to actually probably turn into putting this back here, putting the 4 there. And this, remember I said I could count it as a 5-wave advance. And it did move to a new high. And that could have just completed the whole picture, all of the advances. So we were looking for, or I was looking for, a continued rally, at least up into this level. Now, this additional dip changes some of that zone to where, if indeed this were minute 5, then it would be equal to minute 3 at 44.97. Then we have the additional resistance at 45.07. Then it truly remains, this is the zone that I had felt would complete the entire advancing sequences. This relates to the intermediate 5th wave that's still in progress, and this relates to the primary 5th wave, which is still in progress. All of them will complete where we put this completion for this minute 5, the minor 5. So we have quite a few barriers to cross before the market truly now is basically opening down a little bit. It's opening at 44.37. And it truly, if they come in Asian markets, European markets, and sink this thing down, then I may have no choice but to put the completion point for all these segments right here at this 5, and we're off and running with the next larger correction. I would not consider it a failure because, in all honesty, the pattern did, as expected, move to a new high. So we could label it as wave 5, move the 3 back to there, put the 4 there, and label this as a 5. The only way that I'll do that is if it breaks below 44.03 and starts heading below 43.64. Now, that is attainable if they really start to come in and sell these markets. Whatever the reason is, it makes no difference. We've been looking for tops for quite some time. And so I have been very detailed in my count because I wanted to make sure that we're all going to get to the same level at the same time in terms of at least the S&P and the NASDAQ. The Russell's in its own little world, and it got bashed hard today. The Dow got bashed hard today. And the S&P, all of them got bashed pretty hard. The NASDAQ was down 137. The cash market was down 138 points. And that was on the upswing. So there were points where the NASDAQ was down 200. The Dow was down 450. So what brought that selling on? Combination of things, folks. It could be the situation in Afghanistan, which continues to not necessarily deteriorate, but the massive crowds at the airport and the scenes that were videoed and then spread throughout the world were very disturbing, of people clinging onto a jet as it's rolling down a runway to take off. So it was quite shocking to see the desperation of people nonetheless. And so that may have had effect. The Delta variant is really shutting down the medical systems in several of the southern states. That can have an effect. The fact that Jerome Powell, the Fed chief, came out today and said that they're uncertain as to what, if any, effects that the Delta variant will have on the economy. So these are enough things that could just start to tilt this whole market over on itself, and anything that people want to wrap positive is going to be swamped by these sell orders that I think are going to be coming in. Now remember, I continue to stand. It is going to be a shock. It's going to be a shock to the market. That's the only way that they're going to come in with the strength that they did today, and just push this thing down. Just let it go, and it just goes down. Now, as a day trader, as a trader who you're focusing on trading what's in front of us, we're trading according to our moving averages. We have all the signals that we need. It was, again, not the easiest day, but it was a solid day. It was a solid day to make money on both directions, downside plays and upside plays. So both existed even through the intensity of the selling. There were periods where it's like out of the blue, suddenly, somebody's putting through a big buy order and boom, it hit. And then there were extended periods where the buyers did move in on schedule. So that's still remaining. Again, normally we would consider what's happening today. I really do lean towards making this the completion point. But because this has actually been a very difficult finish to a very long-term bull market, I am not accepting. I mean, I'm accepting what's happening, but it's a little bit difficult because the market should, yes, be wavering, but not as severely. So the only thing I can really relate it to is the degree that this market is completing. Not only just the S&P, but the Dow, the Russell, the NASDAQ. These are very, very long-term degrees. These are bull markets that in the S&P, I can trace it back as far as I can with the Dow, back to 1928. And I can do that via the cash market, the SPX. And on that level, in fact, I'll just show you. I shall do that now. I mean, I'm publishing tonight, probably a little bit later, my second half forecast of what I think is going to happen for the S&P. But check this out. These are super cycle waves in the S&P back in the crash of 1929. So that top prior to the crash was the top of super cycle wave 1. The crash and the move towards the depression, which bottomed in 1932, supercycle wave 2. Then we're in supercycle wave 3, going to consist of 5 waves of cycle degree. 1, 2, 3, 4. And that 4th wave was the financial collapse in 2009, 2008, 2009. So we're in a cycle fifth wave. So this is what we're completing. We're completing minor five, intermediate five, primary five, and cycle five. We are going to be correcting the bull market that has started in 1932 to wherever this tops out. If that was 4,476, so be it. The correction will begin. Ultimately, a supercycle wave for correction should bring prices back into the territory of the fourth wave of one lesser degree. One lesser degree from supercycle is cycle. Where's that fourth wave? Right here. So we're talking that we're sitting up closer to 4,500, and this would be the target. Now, it's not going to happen in a month. It's not going to happen in a week. It's going to happen over a very extended period of time. This cycle fourth wave took 9 years to unfold, 9 years. So I'm expecting at least 5 to 10 years for all of this to unfold. So we will start to track it because the first leg, the first absolute beginning leg should bring us back down towards the this primary fourth wave. That would be the first area that I'd be looking for the market to move down to. Now that low was 2,200. That's 50%. It's going to come up to 50% of our current value, comes off immediately. And then eventually, we're going to be taking off a whole lot more. So that's the power of the correction that we're staring at. What it is going to do is provide opportunities beyond our wildest dreams. There'll be trades upon trades upon trades. There will be opportunities to make a ton of money because we're day traders. We don't carry that risk. Our risk is involved in as we trade intraday, and that's more manageable. So, but also, if you do like to put on positions, if you do want to put on positions in an options, so it's going to reflect more of a time frame on this collapse getting down to here, all the better. We will be reviewing all of this. We will be discussing all of this. This is now, as I'm saying in this second half video, are you ready? Are you prepared? So, and what I'm referring to is like, are you prepared with your education and trading education? Are you prepared with your trading skills? Are you prepared with it just having an account that you're going to be able to trade? Do you have your trade plan, et cetera, et cetera? Are you ready? And the reason that I'm putting out that video is so that I can suggest to people that it's time to either get the education or just join a trade room. Join a trade room where you're going to be able to sit and with other people, be able to know when to go in, know when to go out, make your money, set your goals, et cetera, et cetera. I offer that. I have a trade room. And again, when you see the second half forecast come out, it's a video. When it comes out, there will be a link within that'll direct you over to my website. And I am still offering pretty nice discounts as a summer promotion. And I'm now going to keep that summer promotion in effect through the month of September. So for the balance of August and the month of September, I'm going to be providing these discounts. So stay tuned. And if you have an interest and you want to join now, please contact me and I'll make sure that you get in there and you will get the discount. You will get the promo. All right, back to the S&P. Very quickly, here's how it is. If it comes in tomorrow and we break below 4411.75, I'm going to be putting the 5 here and we're now heading lower. And we will trade what's in front of us and we will start to break down. I will throw up new Fibonacci's. There will be retracements. They will be large because we're going to be falling probably very quickly. So that's the other key. This rally off of the low today was 30 points, 33 points, real quick and very solid. Just push, 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 push. They sold it into the close, but only $5. And now we are heading higher again. So now we're back at 39. So as long as that stays the case, and the buyers do come back, and the buyers continue to push, and we get back above these levels, 44.50, 44.55, 44.65, and start to break to new highs, that's going to give us the support that we are indeed, this is 3, this is 4, and we're in the 5th, and we will likely get up closer to 4,500. A breakdown shifts all of that. So we've got to continue to let the market tell us. We are now just putting some parameters around what we can expect. And if we don't see it, if we get the continued breakdown, it can come back down and test that level, but it cannot break it. It just cannot break it at this point. That will negate upside for now. But if the buyers move back in and they put enough into this, and then we pull back a little bit, all fair game. That's just the natural ebb and flow of the market in a 5-wave advance. But it has to do it. There can't be any hesitation, and not anymore. And I know summer months and it gets really slow and the volumes can dry up. And that may have something to do with this. If you've got a lot to sell and there are no buyers hanging out, you're going to hit bids, and that's what they did. But it doesn't make any difference to an Elliott count or to the Fibonacci. So I can't really fudge anymore or push, not fudging, but extend things anymore. We're now at the point where it's like make or break it market. Let us know. So that's what's on tap for tomorrow. And then we'll go from there. Again, trade what's in front of you. Trade according to your moving averages. Your moving averages, when they all swing like they are now, I'll just open this up so we can see them. Here's the 200. It's still holding steady. It was broken past, and it did accelerate when it did it. So that was a trade. When that broke and it got down, and any rally back up as it did was an entry, and it slid. So same deal. And we start to break higher when we can hold this, which we are right now. It's sitting right at 44.36. We came down, gave it a little smooch, and now we're heading back up. So even now, if it breaks it, that's going to be a negative signal. Okay, so our other moving averages have all kind of turned and are heading lower. The 4 and the 8 are hooking right now. That's a positive, but very, very near-term positive, very short-term. So again, that's what I'm going to be looking for. If we come in tomorrow and it's broken that and it's sitting down here, then it's not going to be a pretty picture. I can allow for this maybe to be 1 and we get a wave 2, but I really don't want to see this wave 2 coming down and testing these levels. It's really got to hold a little bit higher and then prepare for a 3rd. And then if it does come in, the 3rd has to go. Has to push and go, similar to what this did. That's what would have to happen again. This was just a 5th wave of some degree, but it was a 5th wave. Right now, I'm labeling it as a sub-minute 5th wave to complete the minute 3rd. So that's the story for tomorrow. I'm going to leave it there. Again, if you have an interest in joining a trade room that's really focusing on education and coaching and trade room, where you can hone your skills, where you can ask your questions, where you can pick up strategies, where you can follow along and learn. That's my goal. Then you're a perfect candidate for the Logical Signals Trade Room. Again, summer promotions, they're in effect through the month of August and through the month of September. I hope that you choose to join. And the next update will be Wednesday, the 18th.